Hello, I'm Hicran Yildiz, and I'm here to speak to you about overdraft loans. What are overdraft loans, you may ask? An overdraft is a loan that is provided by the bank, and it allows for the account holder to pay for their expenses when their accounts have reached zero. Of course, there is a fee that the bank places when they provide the loan. It's an extension of a form of credit, and it allows the account holder to continue withdrawing cash from their bank even with no balance, placing a negative value in the account. In even more basic terms, an overdraft loan means the bank allows its customer to borrow a set amount of money with an interest on the loan and typically charges additional fees per overdraft. How do overdraft loans work? In an account with an overdraft, the bank will cover the payment the customer has made that would have been rejected because of the lack of funds in the account. But because there is an overdraft loan on the account, the payments will be accepted and the account will have a negative value. Like a credit, the customer now owes that money to the bank, including the interest and overdraft fees alongside. Many times, customers may prefer the overdraft over using a credit card, as the fees to borrow the money is generally less than credit card fees, especially for short-term emergency. To better explain an overdraft loan, here are some real-world examples of when you may need an overdraft loan. Perhaps you are short to make rent payment and need additional cash in your bank account to pay your monthly rent. You would go to your bank and request an overdraft loan. Your car needs an emergency repair and you need the cash to fix it. You don't have it and payments must be done in cash, and therefore you will opt to get an overdraft loan to make the purchase. So when you are making the payment, you'll have the sufficient funds to pay your rent or get that emergency car fix. Of course, the banks are lending this money and providing the service as they are benefiting from it by charging the fees they do. And because they have fees, customers should use it mainly on emergency situations. So what are the pros of overdraft loans? The biggest pro of an overdraft loan is the temporary emergency funds in your account when there is an unexpected insufficient fund. But it is always important to weigh the cost of it. There is no repayment term, so payment on the amount you borrowed is done on the account holder's terms. Overdraft loans can be taken as needed from the account holder. So what are the cons of the overdraft loans? So overdraft loans come with substantial fees and interest, and if not paid timely, will increase an additional burden to the customers. There is no repayment term, so it may be hard for some people to make payments and get out of the overdraft. The amount of funds borrowed are generally not high, so large amounts of overdraft loans are not accepted. So what did you understand from this video? An overdraft loan is provided by a bank to the customer when their account reaches zero funds. Overdraft will allow for the customer to continue paying bills when there is insufficient funds in the account. Just like all credit and loans, the customer pays an interest on the loan, and with overdraft loans, there is an additional overdraft fee per overdraft taken. Thank you for your time. Hope you took away from this presentation.